Hey guys, what's going on? So this video is going to be devoted specifically to Bitcoin analysis and how does it match against the historic analog that we have brought up in multiple videos over the course of the last month. So the area of focus is to bring up some light at what I believe a lot of people misinterpreted or missed in the analysis of the historic analog. So the last video specifically pointed out to a drop in Bitcoin, while most of the people believed and still believe that this is the Vyckoff, or what we call the Vyckoff accumulation pattern. And in this video, I'm going to show you a few charts that are actually going to prove that this is not a Vyckoff accumulation pattern. And some of the arguments and some of the comments and questions that we've got relate to the fact that Bitcoin actually did not drop to a level that we're expecting of 26,000. However, the historic analog is there to guide you and assist you. I mean, clearly we cannot be posting a video every hour on the hour informing you of every single move that Bitcoin makes. Yes, you can do that by signing up for a paying membership, where you've been alerted promptly to short Bitcoin exactly at $35,400, which coincides with this bear reversal candle. At the moment we posted the video, Bitcoin was trading about 33,000. We have said that it was destined to make another drop. Based on our calculations, we said it could drop anywhere from 2,000 to 4,000 by as much as 7,000-8,000 points, which is how we were arriving at a number of 26,000. Now, even though we did not hit a number of 26,000, it does not mean that we're not going to hit that number over the course of the next few weeks. So it seems like Bitcoin is moving higher, but I'm going to show you why that move, while everybody obviously believes at this point Bitcoin is moving all the way back to 60,000, that shit ain't going to happen. And at some point, Bitcoin will go back to 60,000. If just we study the history, it's not going to go there any fucking time soon. So let me break this down again in the historic analog. We bring this up. I've actually enlarged the image here for you. So what we said in the last video was this. We're expecting these two red candles, and this last blue candle with the tail sticking out right here was indeed going to take place on the 27th or the 28th of June. And we said, guys, I don't know of any other videos out there anywhere in the world that said Bitcoin was going to bottom out on or right before Elon Musk's birthday. Okay? We were the original channel that mentioned, maybe there's some copies of that somewhere out there right now, but we were basing that, and we just happened to notice that it was coinciding with Elon Musk's birthday, and we've called the bottom. So the historic analog worked perfectly if you're an active trader. Where you might be misinterpreting the information in that video is, oh, well, you've got it wrong because it never dropped to 26,000. The idea of looking at the charts, sometimes you will be able to nail the exact levels. The reason we specified a 26, possibly even a $24,000 level, because we were looking at this historic candles of this analog dating back to December 2017, January 2018, early February 2018. And because of the close match in this analog, guys, we literally had a movement in Bitcoin, a mirror match, almost on day-to-day basis. And we almost got a perfect match. Now, historic analogs, they're not going to be 100% precise. Based off the last move of this red candle, we could have easily dropped to a level of 26,000 or below in Bitcoin. But what has happened, we've gotten this red candle. We didn't get a follow-through second red candle from the historic analog. And we actually replaced that with a shorter version of this blue candle with a much shorter tail, as represented right here on this chart. So we're going for this huge red candle. We're supposed to get a second red candle close to the magnitude of this candle, and then we're supposed to get another white candle with a bottom much deeper than in this candle. It was going to be resembling this candle more. So it's only in the last 48 hours, more like 36 hours, where the historic analog has failed. Now, I don't know of many historic analogs that can run this sort of precision for 60 days. This is a 60-day match on Bitcoin drop, almost day-to-day basis. And it fails at the very end by not creating that second red candle. Now, if you're an active trader, just by listening to that video, you would have been able to avoid some killer mistakes, which the rest of the world was trying to convince you of. Basically, they were saying that after setting the low at 28.8, we were just going to move higher and higher forever, happily, ever fucking after, okay? And that's not the case, because if anybody would have watched any other YouTube video out there or any other commentary on Bitcoin, you would have gotten in right here at 32,000. You would have been happy that it went up to 35,000. And then you would have woken up and you would have had a heart attack because within literally under 30 hours, it was trading back to 30K. Or even worse, you would have gotten at 35,000 after watching that it's moving higher, and you would have said, oh, Vikov accumulation certainly works here, so I should be a buyer because it's going to move higher. But let's be real, 100%. If you would have gotten in right here at 34, 35K, and the next morning or the next evening, you would have seen your position going down by like 5 grand, what would you have done? You would have gotten out. And again, let's be 100% honest and real here. Most of the people, when they get, let's say you bought a couple of Bitcoins there at 35 grand. You wake up the next morning and now you're losing 10 grand. Most of the people are not going to be able to stomach that. Most of the people can stomach that over a longer time frame. In other words, if this drop was not as sharp. But we predicted this sharp drop. We predicted by looking at this historic analog, showing you this red candle formation. This is the red candle, guys. It's a perfect match right here. So if you were maybe just following some part of the video, but you didn't listen to the rest of the video, yeah, I understand why you would be asking some questions. But if you really try to pay very close attention to some of these videos, just like when we make some market predictions here on this channel, sometimes we specify a particular sector, particular stocks that are going to be hit the hardest. Focus on that opposed to just generalizing things. You cannot be general when you trade. Otherwise, you'll never make money. You have to be very specific, especially when you trade in Bitcoin and when you trade in options. You have to be very specific about your entries, about your exits, when you're getting in, how long you're going to be staying in the trade, and so on. So for somebody that's a long-term holder or hodler, okay, it doesn't matter. Like, maybe you were asleep on that day when the shit dropped 5,000 points. So you wake up today, you're like, you know, you're watching that last video, and you're like, well, the Vikov distribution is right. Like, where the fuck were you when this 5,000 point drop happened after everybody was convinced that this was just going to rocket higher forever and ever again? Well, guys, if you are trying to learn how to trade these markets actively, because this drop right here, this 5,000 point drop right here for our Crypto Star members that are trading crypto with a coach with us here at 13 Market Moves, it meant profits anywhere from 2 Bitcoins up to 6 Bitcoins on this drop, depending on your leverage and the size of your position, guys. So if you didn't make that, then clearly that would be a reason to click the link below and schedule a call so you can find more information to make sure that you don't miss out on crazy opportunities like this. Somebody asked me a really good question about this tornado pattern, and I'm going to take just a little moment to explain this a little bit. The key point of a tornado pattern, and this would be a pattern, let me just review this with you guys real quick. So comes with a drop, bounce, another drop, another bounce, another drop, another bounce, and sometimes it'll just drop and it'll continue dropping right here. But the most critical part of the tornado pattern is if it drops here and the second time or the last time it tries to attempt to move high, you got to make sure that this low right here is under this part right here. So basically, We're talking about a level just under 40K. So if Bitcoin stalls out at a level of 37, 38K, or specifically, I would target a level of 37,800. So if we move here, that would be a lower high in relation to this one more time. And from here, we can get a strong development of a tornado pattern. Now, Bitcoin is rather complacent, which is portrayed in its average true range, which is ATR. And most of the bigger moves, they will ultimately evolve out of a low in the ATR, which I will illustrate shortly. But in this particular instance, the tornado pattern, guys, it's not necessarily, sometimes it'll happen 1, 2, 3 and kill a drop. Sometimes it'll be 1, 2, 3, 4 and a kill a drop. So we're still within criteria for a tornado pattern overall here. Okay, it's just we didn't get a perfect match on a historic analog, but we got such a close match for a great number of days, for a 60-day time frame, guys. This is a killer historic analog that we've been able to nail. And so don't come back now at the very end and say, well, you know, I mean, this is fucked up. Well, where the fuck were you when we told you to short Bitcoin around here, and to short it 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 here, okay? You know, I think you got to take a look in perspective of everything that you have missed if you're just coming up to this point. And if you're at this point, this is definitely not the point to get insanely bullish, because clearly it's easy to be bullish when things are moving higher, okay? Try to be bullish when things are collapsing and dropping, and, you know, I mean, it's not easy to do that. So clearly most of the people are inclined to buy right here when things move higher, and they would actually get out, because this 5,000 point drop, nobody was talking about it besides 13 Market Moves channel right here. So give credit where credit is due, guys. And if you're not monitoring Bitcoin moves on every hour basis like we do here at 13 Market Moves, then don't make general comments about, oh, well, overall it's not dropping, okay? We've played the drop on it all the way from 60K all the way to down here. But there is going to be a really good point to short Bitcoin here over the next few days. So if you really want to know how to trade it, how to make sure you don't miss out on another sharp drop like this of 5,000 points that can put anywhere from 2 Bitcoins to 6 Bitcoins in your pocket rather quickly here over the course of 24 to 48 hours of trading, make sure, okay, you try to get a better understanding of how to day trade, of how to swing trade, how to nail your entries and exits. And one thing that can definitely help you with that is our charts divergence course, and the new course that we put together specifically for trading crypto. It's under the Crypto Star 13MMTV Crypto Star course, guys. So this course literally is going to teach you guys the trade strategy, the trade structure, entries, exit, the psychology of entries and exits, the patterns, the candles, specific indicators, specifically for trading Bitcoin, guys, and number one trading pattern for trading Bitcoin to lock down some home runs. So if you're looking to take your crypto trading skills to the moon, guys, then get better understanding and take action. Get educated so you wouldn't miss out on crazy opportunities like this. But in the meantime, while the whole world is so bullish, guys, what's really brewing here in the markets, what's really brewing here with Bitcoin, guys, is a potential for a tornado pattern. So be ready for it. Learn more about it. Okay, best opportunities, they do come when everything looks nice and calm, when things are just look perfect, when things just keep moving higher. But just looking at this chart, there's definite divergences. We're moving higher on diminished volume. The RSI is having a hard time breaking out higher because of that, because the volume is lagging. That is not the type of indication you want to witness if you are indeed going to have a substantial breakout higher. Now, I promised you in this video I was going to show you some charts. And so I'm going to pull up some charts to demonstrate a key point. Now, we're going to start not with a chart of Bitcoin, but just for illustration purposes, I'm going to bring some charts that will illustrate the pattern. So if you're trying to learn something from this video, I want you guys to focus on the pattern And the pattern is such that don't be in a rush to buy something after a huge drop. So here's a chart of VIAC, which at this point we are leaning towards the bull side on this, because as you can see, after the sharp drop from $100 all the way down into the upper 30s, okay, it's been going sideways for quite some time, and sometimes it really pays to get in on something at the very early stage of a breakout. But if you analyze this chart, and this is a daily chart of VIAC, you can clearly see, so this drop happens, we hit the bottom, we bounce. So we bottom under 40, maybe 37, 38 bucks. We bounce sharply back to 47K. So this would be a characteristic of what we have recently gone through on Bitcoin chart. And so as you can see, there's a number of bounce, then we got drop, then we got this nice white candle and another bounce, and we got a drop, and then we got another bounce and a drop and another bounce and a drop. While it looks in instances, for example, this part of the chart could be equivalent to the part of the chart in Bitcoin that we're looking at right now. So overall, huge drop, bounce, drop, bounce, drop, bounce, drop, and here comes the bounce. And it looks like things are just about to take off, right? And if you didn't see this part of the chart right here, it would look like, oh my God, yeah, we could be going back up there. To 70 or maybe even 100, you know, maybe the worst is over. But no, we're making this bounce and then we're dropping again, and we're making another bounce, we're dropping again. All of this takes place over a course at this point of 3 months, so that's 90 days. Now, if we take a look at some other instances, for example, like Baidu, okay, I mean, it's a similar chart. So we go all the way to 350, we drop all the way down to 170, bounce. Look, it's perfect resemblance of a Bitcoin chart, right? So bounce from 180 back to 220, back down, bounce, drop again. You know, just picture if this were the levels of Bitcoin, right, at around 30K. So here we drop. Oh my God, 28.8. Oh, we bounce. And what happens next? Well, we drop. But this is the point, again, if you don't see this part of the chart, where it's like, oh my God, we're bouncing, we're about to fly to the moon. Well, the point of these charts, before I show you a historic chart of Bitcoin, is after we go for a substantial, crazy drop like that, an initial bounce often would be referred to as a dead cat bounce. And just because we're bouncing doesn't mean that we will go anywhere remotely close, based on the history, back up to the current levels, or not the current levels, but the recent prior levels. So at that point, March 29th, the recent levels, I mean, they weren't that far back, right? They were like 30 days, 40 days when we were trading at like 350 bucks here. So just because we're bouncing out of here does not mean we're going to go all the way back up to 350 bucks here. And let me pull up the chart of Bitcoin just to illustrate. We're going to look at a specific time frame, so we're still giving you an update on like what could be happening next with the historic analog. So just to review before we go there, the current conditions are such. So we got this huge drop. We bounced, right? We bounced from just under 30 to 40K. We drop again, we bounce, we drop again, we bounce, we drop again, we bounce. And so this is the point where everybody thinks, well, hold on, we've tested this 30K level so many times, we're pretty close to it, like 31, and at this point we've got no other way but to move higher. And that's where a lot of people are wrong. That's why I said the VIX of this particular case is wrong. We can get a drop in Bitcoin as early as today. We're above 36,000 right now. Now, the highest probability is, you know, I'm not saying we're going to drop 5,000 points right this very moment, but we could drop and retest some of these levels. We could drop by 1,000, 2,000 points, so on. And ultimately, we can drop to that level of 26,000. But based off the history, let me show you that at this point, what we've said, based off historic analog, we're going to set a temporary bottom in Bitcoin right the day before Elon Musk's birthday or the day of Elon Musk's birthday. And so if we take a look at what happens next, we would need to go back and continue with the historic analog since it's only been off literally by a couple of candles. What we want to take a look at is we want to go and look at specific time frame, which would be, in this case, so we'll go to 217, let's say 1129. We'll go through 2018. Let's go to 1129. Okay, so basically we'll take a look at a 1-year time frame to help you guys understand what's actually going on. Basically, take a look at this. So the equivalent of the initial drop to under 30K would be right here. We bounce, we drop, we bounce, we drop, and we basically visit the same level. Now we bounce again. All right, and we could bounce all the way to, 39K at this point and would still be a downward trend or pattern for Bitcoin overall. So when people are saying, well, it's the bottom, it's the Wyckoff accumulation, it's bullshit. Look at this. This is what's about to happen next. And I'm not saying this is exactly how the historic analog is going to run from here on, like on day-to-day basis. We had an absolute, almost perfect historic match here for 60 days. So it would be almost impossible for it to match for the next 60 days. But overall, if you focus on this pattern, you see that once things drop from 20,000, this was the high in Bitcoin, 20K in December 2017. Then we drop all the way to basically 6,200 here. We bounce. The bounce does not last long. Look, and certainly the illustration here of this historic analog shows that we're not going back to 60,000. And that's what people are going to be talking about. Oh, yeah, but we're going straight back to the moon. It's bullshit, okay? Why don't you go leave some negative comments on them people's videos, okay? Why don't you leave some negative comments on CNBC? As a matter of fact, why didn't you leave some negative comments on CNBC channel when they were telling you to buy Bitcoin at 60,000? All right, so the point is, based off the charts, we're not going to go straight back up, just like we didn't go straight back up to 20,000 after we had this crash in 2017 and early 2018. It would make sense, and it would make you believe, like when we're bouncing strongly, oh yeah, we're going back to 20,000, we're going back to 20,000, which would be the equivalent right now of you saying, oh yeah, we're going back to 60,000, we're going back to 50,000, we're going back to 65,000. Well, if you study the history, this shit ain't happening. And it ain't happening not just for another 3 days or not for another 3 months. This shit ain't happening for another couple of years. And at that point, you will definitely hit the unsubscribe button. I understand. I'm not trying to accumulate a bunch of subs like a bunch of other channels do. As a matter of fact, probably the only channel on YouTube devoted to trading and finances and stock market that don't even allow ads to make your experience a little bit better and focus here just on the charts, guys, because that's really when you trade, that's the only thing that matters. Our channel is not even monetized, guys. Other guys, they post videos about trading just so they can make money off the damn YouTube ads. We don't do this shit because we don't need to. All right, so the point is, if you focus on this, all right, you're going to see that Bitcoin does not go back up to 20,000, and that gives us a pattern of why it's not going to go straight back up to 60,000 now. And it's not going to happen for a while. So basically, any bounce in Bitcoin needs to be shorted based off this history right here. Until ultimately, you know what happens here. We hit about 3,300, 3,500. That's the bottom. If you look at our channel, this is the time frame where we posted the video on buying GBTC when it was $3. Yeah, the video is there, guys. You can go look it up. We told you to buy the hell out of GBTC at $3 before it goes all the way up to $50. So this chart right here explains why Bitcoin is not going to rocket higher. It explains why the current pattern in Bitcoin is not Wyckoff or Vickoff, just like the rest of the world is thinking right now. Okay? And if you want to know how the hell to trade this next moves, guys, there's two things you've got to do. All right? You've got to sharpen your skills and trade in cryptos. Sharpen your trade structure, your entries and exits by going to 13MM click the crypto star right here, get the course. Second thing, okay, when you click right here, you're going to get an opportunity to trade with a coach. So make sure you do these two things so you don't miss out on the next killer opportunity in trading Bitcoin, Ethereum, and other wild shit out there that can make you a bunch of money. So let's roll. Hope this explains, it gives you a slightly different perspective. If you have any questions, drop it in the comments below, guys. If you're ready to rock and roll and start trading, click the link below. Go to 13marketmoves.com and get started right now. Stop waiting for good things to happen to you. Take action now. Make good things happen to you. Let's roll.